Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Until this past October, we had seen a continuation of the resultant move lower from the February to June diamond pattern. The primary target of such a move down was achieved in the 156.35 zone, but the secondary, harder to reach target down in a 141.80 zone was retired. Okay, so in September, October, and November, a few bullish patterns started to emerge. These were the mid-September, mid-October, turn of October into November, and the mid-November weekly key reversals up. Between them, they stopped a decline and eventually turned the market back up. The mid-September action eventually became a pattern, an ascending scallop pattern, that led to another pattern, an early October to mid-November bullish halfway hesitation, which in turn led to the late October to-date imperfect bull channel, currently 170.85 up to 185.20, which is highlighted in dark blue on my daily chart. I say imperfect as we have seen two separate penetrations topside, last week and the week before, both of which have been repaired. I suspect the reason from the attempts higher, or for the attempts higher, was because of the crossover of the upper bull channel line with the significant neckline, currently at 182.35, of the large January 2020 to April 2021 reverse head and shoulders bottom. That is highlighted in green on my daily chart. Some may have thought it would be an ideal way to punch up through two resistances at the same time in an economy of effort. However, they obviously underestimated the power of this combination and of the overhead 2015 high at 187.40, and we're currently back below both. Though I do not think it may be long before we see further attempts higher, especially now that they are separating and their individual forces are a lot less than when they were combined. You see, overall, the bull channel is still the dominant pattern here, right now. London coffee. The influential pattern here from the middle of the year until this month was the June to December bear channel, highlighted in green on my daily chart. Attempts to break higher out of it happened as far back as late October, but the real push up happened in mid-November, with the market utilizing, to varying degrees, the rising short medium moving average currently at 24.19, the long moving average currently 24.39, and especially the medium moving average currently at 24.42. In the process of breaking higher, the market also formed a small late October to date ascending triangle. Now, we are still within this pattern, so I cannot give you ideas either lower or higher until I see a confirmed break. But I do note that the triangle reaches an apex at about the turn of the new year. So there is very little time left. Plus, always be wary of false breaks on these patterns, especially when they are this advanced. This just leaves the original broken bear channel in green with its move higher, and which I feel obliged to lay out some potentials for such a pattern. So on the top side, we have a primary target X in the 26.88 area and a secondary hard reach target X1 in the 28.38 area. The immediate overhead resistances for such a move higher towards target X are in the June 2011 high at 26.41 and a March 2011 high at 26.72. Whilst for the harder target X1, we have the limited March 2008 high at 27.04 and the 2023 high at 27.97.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.